Hello family. So today this is episode number 6 on how to determine our daily bias. You saw the first episode, the second episode, third and fourth and fifth episodes. If you haven't gone through them, I requested that you try to go through them, which will give you more insights as you come to this one. So we still have 4 more episodes to complete the series of 10 episodes on how to determine bias, and I believe by the end of the 10 episodes you will find something that will improve on how you read price, on how you determine a bias. The most important thing is ask yourself where price is, where did price come from, and where is the nearest place that price is likely to gravitate to. Those 3 questions will help you a lot so that you don't fumble as you try to seek areas where price is likely to gravitate to. That's being said and done, let's dive into this chart here. So clearly we see a 4-hour FVG. This is for HR FVG. Now when price is filling this FVG, remember I took out the short-term low there. So we are in a 4 FVG, price has taken short-term low and it has rejected it above the close of these candles. What does that tell you? I want this next candle to open low and go high. That is the anticipation. So avoid this candle that is printing right now, and now let's work with what has already happened here. Now this is 4 hour as my higher time frame. Then I will now zoom into 15 minutes to look for ways of getting higher. Remember, all the time, sometimes you see me exiting earlier before my target zone. Reason being, you don't need price to go directly or completely to your TP so that you make money. Wherever you feel your intuition telling you this is enough, exit that trade and secure some profits. That is the spirit that I want you to cultivate. But if you have greed that is driving you, telling you that you need to wait until price goes all the way to TP, but before I finish this video, you will see what happens. So I'm producing this video purposely to show you the importance of taking a risk to reward of 2 and that of 1 to 10 or 1 to 50 and all that, and you'll see and you'll be surprised. So just hang in there. So this 4-hour chart looks clean like that. Then we drop into 15 minutes. Look at that. So we still have that SMT there. You see that? Then what follows this one is something that you should see. I want to remove this one. Now we know that we are rejecting off a key level. So we have this SMT. Let's place this at the center. See that? Yeah, so we have this short-term low being swept. This is amazing. That is sell side liquidity, SSL. Then my interest is this candle that actually took out that low. You looked at the video on how to use order blocks. If you haven't, you can go and check it out if you find time and try to connect why I am using this candle here as my potential order block. Up to that, see, this is very okay. So number 1, we have a key level. Price has rejected that key level. Then we have SMT. So that is very important. Then number 2, price has closed above this candle that took out liquidity. With number 3, So that candle becomes an order block. So price closes above. Look close again. What are you seeing here? That is an FVG. Very interesting. See that? So we have SMT, sell side purge, close above the candle that took out sell side liquidity. Let's name this one sell side liquidity. Bottom right. Yep. Can change the color of the text to be too shouting. Yeah. So we have that now. Now what from here? Now you can see where the entry is. If price could have come all the way to this level, that should be our entry. But now we have a fair value gap. Then now our entry should be from this fair value gap. Now where do we need to target? This area here. That is the closest area that you need to target. That is our buy side liquidity. Buy side liquidity. Top left, done. So I want you to look at this now. There's a reason why I was doing this video for you. Now if you go in here, there, take price all the way there and exit once price, so stop loss can be below this candle with a fair value gap or slightly lower, or 50% of this order block, depending on your risk. This is a 3.7 reward. Now look at what happened here. It was very interesting because when I was watching this price, I really saw it necessary for me to use this as the 4-hour 15-minute time frame alignment. Why? Because I wanted to explain this aspect here. Now you see, if you target too far, price is likely to do this. Let me tell you guys, it's painful, very painful to see this. Like you are in good profit here, but because you did not take partials, you did not trail your stop loss, but you see it down here again, no time. That is very disappointing. But if you could have taken this sweet high there, that was a quick look at that, zero drawdown, and you have your profits at that level. So this video number one is for buyers, yes, but again is to help you understand that you need to pay yourself. Don't overstay your welcome in this market. Get what is possible and leave. That your objective is to make some profits. If you overstay, you see you will be caught with this kind of moves. Remember, this price can move down like this, come take out this high and then continue higher. But you see now, the moment it starts going high again, you are no longer part of the move. So don't chase price. Target the easiest areas that are so close and so reasonable. Of course, previous days highs and lows, session highs and lows, those ones price most of the time tends to grab them before any retracements. So hopefully you found this very useful, guys, and I hope you're learning something as we progress each and every single episode. Let it teach you something that you can apply in your trading career. Hopefully you saw some light on this. I will always ask you to share the content for those. I know you have a friend or somebody who wants to learn for free, because there's nothing being charged here. And if you don't find this so that much useful, you can go all the way to the mentors channel, that is ICT's channel, and you can learn in a better way from his channel. So up to this point, I wish you well. Remember to leave that thumbs high. It's a sign that what you are being fed is very useful. Until next time, be safe.